Picture this: you wake up tomorrow, check your bank account, and the dollar you've relied on for years has quietly lost value overnight. Your savings, your investments, your retirement, all subtly shifting beneath your feet. Sounds scary? It is. Because the US government just entered a shutdown, and the ripple effects are already hitting the dollar. Before you start imagining hiding gold bars under your mattress, don't worry, we're not going full pirate mode today. Stick with me. By the end of this video, you'll know exactly how to protect your wealth and even spot opportunities when most people are panicking. A government shutdown isn't just a headline, it's the moment when Congress can't agree on funding the nation. Suddenly, thousands of federal workers are sent home without pay. Essential services slow to a crawl. And financial markets? They start to jitter. When uncertainty rises, the US dollar often takes the first hit. Investors don't like the unknown. They start moving money out of dollars and into safer assets, gold, the Japanese yen, sometimes even cryptocurrencies. That shift might seem invisible, but it quietly chips away at your purchasing power. Think of it as a silent tax, one that hits your wallet without warning. Ever noticed how your morning latte keeps creeping up in price? That's not just inflation, it's the ripple effect of currency fluctuations caused by uncertainty at the highest levels of government. Every dollar you spend, every bill you pay, feels a little pinch. And here's the kicker: this is only the beginning. The real danger is the domino effect. It can touch your investments, your mortgage rates, and even your retirement plan. Most people never see it coming until it's too late. Up next, we'll dive into exactly how a shutdown can sneak into your financial life in ways that make your money work against you, and why ignoring it could cost you more than you think. Within hours of a government shutdown, markets react, and they react fast. Traders start recalibrating risk, adjusting portfolios, and protecting their assets. The dollar takes a hit. Gold begins to surge. Stocks become jittery, swinging up and down with a nervous energy that can feel almost contagious. You might not see these shifts on the news, but you feel them in very real ways. Mortgage approvals could get delayed. Interest rates might tick higher. Small market losses start to stack up in your retirement account or investment portfolio, sometimes without you even realizing it. It's a subtle nudge, but over weeks and months, those nudges add up. And let's be honest, it's a bit like watching your financial life do a tightrope walk without a safety net. Heart racing, stomach churning, and stressful. But don't worry, we're about to hand you that net, showing you what you can do to protect yourself. The thing is, these are just the reactions you can see immediately. Beneath the surface, there are hidden forces at work, forces that could amplify these effects even further, quietly shaping the value of your money, your investments, and your financial freedom. Next, we'll uncover those hidden forces, and why understanding them now could save you thousands, and possibly protect your entire financial future. When the dollar weakens, it doesn't just affect the stock market or traders sitting in high-rise offices, it touches every corner of the economy. Imported goods become more expensive. Inflation creeps higher, quietly eroding your purchasing power. Even your retirement accounts can take a hit as markets fluctuate. Real estate deals slow down. Small businesses suddenly feel the pinch. Consumer confidence drops. Each impact feeds into the next, creating a chain reaction, a domino effect that moves quietly, but powerfully, through your financial life. And here's the hard truth: even a short government shutdown can kickstart this sequence. A longer shutdown? The consequences don't just add up, they multiply exponentially. Your savings, your investments, your everyday expenses, they all feel the pressure. It's enough to make anyone nervous, and that's exactly why most people never see it coming until it's too late. Imagine waking up one morning and realizing that these ripples have reached your mortgage, your business, or your retirement plan, and you didn't have a plan to protect yourself. That's why understanding these hidden forces isn't optional, it's essential. So, how do you navigate this financial storm without panicking? That's exactly what the next segment will reveal, giving you strategies to stay ahead and protect your wealth. Here's the secret. Smart investors don't panic when uncertainty hits, they act with strategy. They diversify their portfolios, spreading risk across stocks, bonds, and safe haven assets like gold or foreign currencies. They keep a close eye on the markets, treasury auctions, and any signals that hint at shifts in the dollar or interest rates. It's the small, calculated moves that make the difference. Maybe it's reducing your exposure to dollar-only assets, delaying a big purchase, or shifting funds into safer investments. These aren't dramatic gestures, they're strategic actions that protect your wealth while others are reacting emotionally. The difference between panic and strategy? It can be hundreds, even thousands, of dollars saved or lost. And let's be real, no, this doesn't mean building a bunker in Montana, unless that's on your bucket list. This is about smart, practical moves you can make today, using the tools already at your fingertips. But here's where it gets really interesting. A government shutdown isn't just a threat, it can actually create opportunities. Opportunities for profit, for positioning, for securing long-term financial stability, if, and only if, you know exactly where to look. While most people are panicking, a select few see openings in the chaos. Gold, certain foreign assets, even carefully timed real estate investments can actually grow your wealth while the dollar is under pressure. These aren't lucky guesses, they're calculated moves driven by knowledge, timing, and decisive action. Imagine being the calm one while everyone else is reacting emotionally to headlines screaming doom. You're watching the market, analyzing trends, and making strategic moves. That's how fortunes are built, by the people who act with intention, not by those who react out of fear. It's an exciting place to be, because opportunities often hide where uncertainty reigns. But there's one final factor, the hidden element behind the shutdown and market moves, that could tip the scales entirely. Ignore it, and it could cost you dearly. Understand it, and you're positioned to not just survive, but thrive. In the next segment, we'll reveal that final factor and exactly how to use it to protect your wealth and even seize advantage while others panic. The critical factor in all of this? Duration. How long the shutdown lasts will determine the intensity of its impact. A shutdown of just a few days? Markets may shrug it off, and the effects on your finances are manageable. But 2 weeks, or longer, that's when the real volatility sets in. The dollar can weaken sharply. Interest rates can shift. Investment accounts and retirement funds can start feeling the pinch. Suddenly, what seemed like a small ripple becomes a wave, washing over your savings, your spending power, and even your long-term financial plans. Ignoring this reality isn't just risky, it's dangerous. The people who thrive aren't the ones hoping the problem goes away. They're the ones watching, understanding the signals, and acting intelligently to protect their wealth. This isn't speculation. This is a call to protect your future today. Every decision you make now, no matter how small, could determine whether you come out ahead or behind. The U.S. government shutdown is more than a headline, it's a reminder that wealth depends on foresight, not luck. Stay informed, diversify, and act wisely. If this video helped you understand the risks and opportunities, hit subscribe, like, and comment. How are you protecting your wealth in these uncertain times? Let's navigate this together.